What is going on, ladies and gentlemen? How are we doing today? It's Tuesday, August 3rd. Yeah. So, give it a couple moments, let everybody join up. Hopefully, you guys all had a great day today. You guys killed it in the stock market. You're able to pull out a green day. If not, don't be too hard on yourself. Tomorrow is a new day filled with opportunity. Based on the title of this video, we're going to talk about fear today. We're going to talk about fear, and we're going to go over a few of the stocks that popped off today. So if you guys noticed today, I wasn't in chat today. I woke up this morning to no internet at all. So I had to sit on the sidelines all day today. I have no idea what popped off in the market. My internet didn't come back on till around 6 p.m. So the whole day I went without internet. I showed up ready to rock and roll, get the day started, and got presented with no internet. So I had to sit out and sit on the sidelines today. And to make up for that, I figured I'd go live for you guys, do a little lesson. We'll cover and talk about what stocks popped off today and prepare for tomorrow. What do we have here? Hi, Mr. Wolf. Just got back into town about an hour ago. Welcome back, Calvin Jones. FGLC from the weekly watch list squeeze today. Nice, nice. FGLC? You mean FLGC? FLGC? Yeah, that one had a good squeeze today for sure. This was on the weekly watch list, so if you go back and watch the last video, which was our Sunday scan that we do every Sunday, FLGC was on our weekly watch list for a potential squeeze. Very nice move today. From $8 all the way to $14. Heck yeah. Very nice. All right, so let's jump into fear real quick. FEAR. So fear follows us everywhere in life. Fear holds us back. I preach to you all in my trading, or I teach to you all in my teachings. We do not trade the stock market. We trade our beliefs we have about the stock market. Now think about that. We do not trade the stock market. What we trade are our beliefs we have about the stock market. We all have different beliefs. We all learned from different people. We all went through different experiences in life that have molded our beliefs, good or bad. That the famous dog story, and I'm reading my notes that I wrote down before I started this stream. Here they all are right here. We all went through different experiences in life that have molded our beliefs, good or bad. In the famous dog story. This famous dog story was in Mark Douglas's book, The Child. We all know children are like sponges. They don't know anything. The world is brand new to them. They ask so many questions. Most parents, not all parents, get annoyed at their children. They don't know any better. They're new. Everything around them is brand new. So a child's first experience with the dog, they have no idea how this dog acts, what the dog is, and the dog bites them. Then as the child grows older, the child had its first bad experience with the dog. So it's grown to believe that all dogs are bad and dogs will bite you. We all have different beliefs, and our experiences, our first experiences, mold our beliefs. Now, really sit down and think about that, and think about things in your life that molded you in your beliefs, in your decision making, and who you are as a person. It's some really, really deep stuff. And I feel a lot of people don't fully even understand this or recognize this inside and outside of the stock market. If you're just focusing on being a good trader, you're going to fail miserably. You have to focus inside and outside of the markets as a person. You have to grow. You have to know yourself, understand yourself, and then start developing strategies that revolve around the person who you are, because we're all different, all of us. Real quickly, I've been seeing a lot of trading ads on Facebook. Last week, I was on vacation, and it seemed like every single time I got on Facebook, I was seeing a new trading ad pop up and a brand new trading ad. And it just got me to thinking, I'm seeing a lot of these new trading ads, and from people I've never even heard of before. And I'd go on YouTube and look them up, and their YouTube channel was created within the last 2 years. So a lot of gurus are starting to pop up out of nowhere and trying to sell people courses on how to be a trader. And when in reality, trading in the stock market has been super, super easy. It honestly has, because everything just keeps going up. Everything. All you had to done is buy and hold. Who knows how long you've had to hold that position? 2 weeks, 3 weeks, a month, 2 months, 6 months. And then when the stock comes back up and you sell it for a profit, you're considering yourself a genius. No matter how long it came back and sold for a profit, you are a genius. Back to fear. You can have all the confidence in the world and go on an epic run with your trading. Then you come across that one mistake and you take a loss, and it kills your confidence. Then you start doubting yourself and afraid to pull the trigger. We've all been there and done that with this one. You feel like you know everything. You're on a winning streak. You're killing it. You're making all this money. Every single trade you get in, you're pulling money, pulling it. Then you run into that one stock. You either take a loss on it or you take a huge loss on it. And then you do not want to swallow your pride. You got a big ego. Your confidence is through the roof. You don't want to accept that loss. So you keep pushing and pushing. And you're just digging your portfolio deeper and deeper and deeper. And then at the end of the day, you're disgusted with yourself because you took a $2,000 loss, $5,000 loss. You blew up 40%, 50% of your portfolio. You're disgusted with yourself. You're ashamed. You can't believe you've done that. It's perfectly normal, believe it or not. Everybody goes through it. Everybody. It's all about how you learn from your mistakes, adjust, and carry on. I myself, from time to time, take losses. The most important thing you have to do is you have to believe in yourself. And I tell you guys this all the time. You have to believe in yourself. I know, we all know market cycles are always changing. You're going to have strategies come and go. They're going to work one moment, then they're going to not work the next moment. And you got to adjust to the market cycles. If you believe in yourself, you've studied yourself, you understand yourself, and you've built your trading revolved around the type of person that you are, you should believe in yourself enough that you believe in yourself, is what I'm trying to get at. You have to believe in yourself. If you've been able to consistently pull money out of the markets for weeks and months, you know what you're doing. So don't let one mistake or one bad day dictate your future. You just can't. You got to pick yourself up and continue carrying on and adjusting. That's the most important thing. Revenge trading, it's a downfall. So once you start having that doubt, you don't believe in yourself, your strategy stops working, you're starting to revenge trade. It's a downfall. It really is. You start to get careless with your trading. You're jumping in on stocks that don't offer the best risk versus reward setups. You're desperate. And it's all about your state of mind and where you're at in your current life as well. So let's say you do this full time. You trade full time. You got a $10,000 trading account. And this is just an example. That $10,000 trading account is all the money that you have. You don't have no money in the bank, no money in your savings. You got debt on your credit cards. You got a mortgage payment every month. You got a car payment every month. All of that is going to weigh on your shoulders. And you're going to force trades. You're going to look at your $10,000 account and you're going to be like, this is all the money that I have. I cannot lose this money. I can't. So you're going to be afraid to take trades. You're going to leave money on the table. You're going to take trades off way too fast. It's just a disaster waiting to happen. That's why I try to preach and teach you guys. When you're just starting out learning this game, stack money. Get a savings account going. Pay off your debt. Pay off your car. Pay off your house. Stack that money. Better yet, save up, fund your trading account, and once you have your account funded, continue to stack money and keep it saved. That way you know you got a fully funded trading account and you got a savings account. You don't have to have that pressure on your shoulders of your trading account. I have to make money. I have to make money. That's a downfall for a lot of people. We just did a video not too long ago, unreal expectations. And it's honestly the truth. A lot of people come into this game, they don't have much money to their name, maybe a couple $1,000s. If you look at the statistics, most Americans live check to check. And they don't have, I think a lot of them don't even have $200 in their savings account. So if you come into this, not much money to your name, you open a trading account, you fund it with $2,000, and you're having unreal expectations of placing trades and trying to make $1,000, $500. You got to take a step back and look at the statistics of what you're trying to achieve. The long-term portfolios, the hedge funds, their goal is to outperform the S&P 500 every year. That's why they have a job. They're coming to people and saying, hey, on average, the S&P 500 gives returns on average of, let's say, 8 to 12% a year. Well, if you put your money with my hedge fund, we're aiming for a return of 15% or more per year. So the long-term investor's like, yeah, that's good. I like that. Let's go for it. So if you come into this with a $2,000 trading account, You're trying to make $1,000 per trade. You're looking to grow your portfolio 50%. That's so unrealistic. And to do that consistently on every single day, that's just not going to happen. It's not. You're going to run into that one bad trade, and then it's going to cut your account in half. So you take a 50% loser. That $2,000 account is now a $1,000 account. Then you're disgusted with yourself. You want to try to make it back. You force trades, and then you knock it down to $700. And then you give up, you quit, you say it's rigged. And it's all about the way you went about it. You went about it with unrealistic expectations, brah. What did you expect? That's why I laugh when I get on YouTube and I see these gurus on here. They start up $2,000 account challenges and people flock to it. They flock to it like the movies back in the day. Like when the blockbusters would hit the theaters in the summer. It's just so unrealistic. And you got to keep in mind as well, these gurus that are starting up these $2,000 trading challenges. Now, not all of them, but some of them are already rich. So that $2,000 challenge isn't nothing to them. They can blow that account up and they can care less because they got money in the bank. Versus someone who's new, up and coming, the average Joe, just trying to learn this, and they got a $2,000 account, they're only going to be battling with themselves while learning this game, going through the ups and downs of trying to learn to be a trader. What's the word I'm looking for here? Entertaining the viewers. They're going to get self-conscious because the person doesn't want to look bad trading the $2,000 account. You know, he wants to grow his subscribers, so he's got to look good. So now he's got that pressure on him. It's a lot that goes into it. It really is. Harry Van Fleet, thank you for the wisdom. Blessing to you. No problem, Harry. Megan Lally, or leaves trades and watch it drain in the death grinds. That's something that a lot of people struggle with or go through. You get in on a trade and it immediately goes against you, and you just watch it tick by tick go lower and lower and lower. And then the pain of holding on to that loser gets so severe, you finally cut it, and then the stock finally reverses and it runs all the way back up to where you bought it. Happens all the time. It happens all the time because people always do the opposite. People are always buying at the highs and selling at the lows. So it's in a way you have to trick your brain in a way. When you're wanting to buy, take a step back. You shouldn't be buying. When you're scared and the stock's down at the bottom at support and you don't want to buy because you feel it's going to fall through that support, that's when you should be buying. Because it rips back up majority of the time, and then you're chasing after it. It's all a mental game is what this is. And once you start understanding that, and you start seeing patterns happen over and over and over again, these patterns happen over and over and over again simply because human nature never changes. It never changes. That's why we see U-shaped patterns, triangles, head and shoulders, the bull flags, the list goes on and on and on. These patterns have been around for hundreds of years. Hundreds of years. This is going to be, I say this all the time, When you're learning to be a day trader, this is one of the hardest things you will ever accomplish or learn in your life. This is a new skill that you are learning. And once you learn this skill, you will have it for a lifetime. You really will. You're not just going to pick this up and learn it in a year. You're not. You're just not. There's just way, way too many moving parts to learn about and understand. You have to learn about candlesticks, market cycles, technical analysis, sectors, all the technicals of the stock market. Then you have to learn about yourself and then adjust and develop strategies based on your weaknesses and your strengths. You're bettering yourself by reading and watching all of these books and videos on psychology, emotion, human nature, human intelligence, emotional intelligence, all this stuff, putting it all together, going through the ups and downs, learning from your mistakes. Most people quit because they just don't want to put the effort into this. Not realizing, and one of the things that I like to say, when you're just starting out, the last thing you should be worried about is making money. Just study your butt off. Study, study, study. Anytime you get a winner and you make money, reinvest it back into your education. Do not worry about making money in the stock market for at least the first 2 years. The first 2 years. Because all of this studying, all of this work you're putting in, you're developing yourself, it's all going to pay off in dividends down the road. When you start seeing that consistency in year 3, year 4, and you're showing up every day and you're able to pull money out of the markets consistently, cut your losses, move along, that's paying off in dividends right there. And you're going to look back and you're going to be like, man, I'm glad I stuck with this. And now it's starting to pay off. And now I can start to see the potential that the stock market has. It's the honest truth. Most people want things now. It's just like going back to human nature. Like when the new iPhones come out, what does everybody do? They run immediately to the iPhone store, and you see a huge line at the iPhone store because it's the newest and greatest thing. People have to have it now. Just like when new traders come into this, they see other traders making all this money. They're like, man, I want to be like that guy. I want to be like her. I want to be like that dude. I see that dude every day. He's making at least 2,000. Not realizing that that dude's been trading the last 5 years. He's built himself up to make that kind of money. You get where I'm coming from? So you got to start small. You got to focus. First, focus consistently trying to make $5 in the stock market. The ball is in your advantage now. There's practically no commissions anymore. Back, 3-4 years ago, I used to have to pay $7 to get in, and I'd have to pay $7 to get out. So I'd be spending $14, $20 per trade. Now it's free because of Robinhood. So now you can practice with 1 share, maybe 10 shares. Start small. Focus on consistently trying to pull $10 a day. And once you can consistently and confidently do that, then I call it level up. Level up to $20. It's a process that you have to go through. No one's ever just going to show up brand new and just start making $1,000 a day. It's never happened. It never will happen. Eventually, that person's going to run into some struggles. He's going to dig that account into the ground, and all of his profits are going to go right out the window. Happens all the time. It took me, I tell you guys, it took me 2.5 years to start seeing consistency. 2.5 years, but it's well worth it. Well worth it. Now, today, I do this full time. I do this for a living. I'm excited to wake up every single day, fire up my desktop, my monitors, my chat, participate with the chat, teach other people how to do this, call out stocks, talk about what we're trading, motivate you guys, because I was there. I was. See? Now, Null already got, that's what I'm talking about right there. People get attracted to what they fear, or they stay away. Fear dictates everything we do, guys. It follows us everywhere, even in our trading. It's just like when we did the video not too long ago. We're gonna pull it up. Not pull up the video, but this guy's channel. It's just like when the stock market, when you see the S&P 500 in the futures gapping down. Everybody starts to panic. And then the fear gauge starts to pop up. Because all these long-term investors, they don't want to watch years of their 401k and their investment every single week the last 40 years get taken away in a market crash. Let me switch accounts here. I think that guy's channel's name's like Fallible or something. Yeah. We've talked about this many times. So, and I'm not personally attacking this person, but if you just go through and look at Warren Buffett ruining your portfolio, stock market crash, stock market crash, 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 crash. So every single one of this dude's videos has the title stock market crash to drive to drive fear into the viewers to come to their channel. This guy, all he cares about is views. The more views he gets, the more money he receives. So his job is to drive fear into the viewer. If you're not here every day in the stock market and you see somebody post a video, stock market crash coming, you're going to be like, what? I've been investing every single week the last 50 years and I retire in 2 months. Stock market crash can't happen now. You click on that and you get suckered in. Every single video, look at that. That's disgusting. That's just so disgusting. And on average, every video is getting 4,000 to 5,000 views. And this guy has 62,000 subscribers. Fear drives everything. It holds us back from what we want to achieve in life. It's just like when you go to a theme park and you get on that roller coaster. When you're standing in that long line, if you're at the end, the fear ain't that bad. But as that line starts to get shorter and shorter, and you're about to get on that roller coaster, fear starts coming in. Now you start doubting yourself, and I don't want to get on this roller coaster. This thing's crazy. You're seeing the roller coaster. People as it goes up and then falls down. That fear kicks in. You don't want to do it. And then you sit down in it and you're going up. And that clicking noise as it's slowly going up. Now your heart's thumping. Your adrenaline's coming in. Your fear. And then you get at the top and you go down. You go through the whole thing. And then at the very end, you're like, man, that was fun. Let's do that again. That's why people love horror movies so much. They like the fear. Yeah, I hear you on the Dragon Ball Z thing. Just like people that pump up stocks so they can dump it. No matter where you go, pump and dumps have been around forever. There's a really good movie out there with a super young Vin Diesel in it. It's called Boiler Room. Got a super young Vin Diesel in it. If you guys have not seen this video, and it's also got this kid right here in it. But Boiler Room, this came out in 2000. And what this is about is boiler rooms, pump and dump offices in the 90s. What they would do is they'd rent out these offices, and all day they'd be filled with phones, and all they would do is call up people, lawyers, doctors, and sell them a garbage penny stock and present to them, it's got upcoming FDA news. Now's the time to buy. And they'd pump the stock up. And these guys would get commission on every single person that would buy in. Same thing applies with Wolf of Wall Street, the movie. Wolf of Wall Street with Leonardo DiCaprio. This one right here. Really good movies. So no matter where you go, pump and dumps are going to be around everywhere. Back then, it used to be calls. Then the internet came about and we went to email, email promotions. Now we have all of these chat rooms. Discord, for an example. You know how many stock market day trading chat rooms there are out there? So now we have chat room pump and dumps. It's just going to keep evolving and evolving, and it's always going to be around. And the way I look at it, yeah, it's a bad thing, but the saying goes, don't hate the game, hate the player. I'm actually interested in learning about these pump and dumps, discovering them before they happen, and capitalizing on it on the way up and as it falls down. There's always a way to make money in the stock market. Always. That's what drives the stock market. There's so many different opportunities out here. It's unreal. It's all about discovering who you are, what you like. Do you like to go long? Do you like to short stocks? Do you like to trade options? I mean, there's so many different trading vehicles out here. It's unreal. Futures, cryptocurrency, you got pairs, so many. It's unreal. OTC markets, pink sheets. I mean, the list goes on and on and on. discovering who you are, what attracts to you, learning about yourself, and then developing a set of skills that can make you money consistently in the market. What's that show? CNBC? They're one of the biggest manipulators ever. Whenever, just whenever there's a market, whenever you notice the stock market's going red, the SPY and the indexes, turn on CNBC and just listen how they talk on there. Their job is to drive fear into the average Joe and the average investor. That's their job. They glamorize it. They feel like it's the end of the world every single time the markets go red. They look at it like everything's going to fall, crumble, and go right down the drain. They glorify it. And it's just to simply drive fear into the market. And that's why whenever the markets start to go down or we see things start to go off and go crazy, we got this FOMO meter that we pop up. Fear of missing out, or the fear gauge. The fear gauge will be super high. And even with that going on, it presents a lot of opportunities. Yeah, there's so many trading vehicles, guys. Dividends, options, so many. Just don't overwhelm yourself as well. I see a lot of newer people come into this. They try learning how to go long, how to go short, how to trade options. And then they want to get into futures, and then they want to trade pre-market. And it's like, brah, chill. You're trying to dip your hands in every single thing, trying to be profitable in all areas. Look at me. I only trade small cap stocks from $5 up to $50. That's all I trade. And I just specifically focus on this one little niche out of everything in the stock market. That's all you got to do. And then once you've mastered something like this, then maybe you can branch off and maybe start learning about options. That way, when large cap stocks go into earnings, you could start trading options. That just opens up another door of opportunity right there. All right, so let's get into what popped off to today so we can prepare for tomorrow. Like I said at the beginning of the video, this morning I was not around because my internet went out, and it was out all day. It just popped back on 2 hours ago. So I didn't really get to see anything or trade anything today. I had to sit on the sidelines. Thanks for subscribing, Noel. Welcome to the Wolfpack, homie. So we got FLGC. This had a good move today from 8 all the way to 14. Solid move. Beautiful textbook. You got your morning spike right here. Then you got your lunch hours consolidation. And then at the end of the day, power hour, this thing took off. What more could you ask for? Make money in the morning, go to lunch, come back, and the end of the day. That's how easy. This is a Nate from Investors Live calls this the ABC pattern. A stock has a morning run up, and then that's A. So this would be A. Then the stock consolidates lunch hours. This would be B. And then the stock goes on an end of the day run. This one would be considered C. The ABC pattern. So I'll add FLGC to my list up here for our Monday, Tuesday. So I guess EVK had a big sell-off today. All right. Let's see if FLGC will get a bounce, or EVK will get a bounce tomorrow. We had a good day here. Then today it just sold off all day. I like to see stuff like that because when a stock goes red on the day after having a really good green day, I want that stock to get driven down as far as it can go, building up that tension, be super red. That way on day 3, we could potentially see a nice momentum rip to the upside right in the morning. How many times, if you guys are a part of the community here in the Discord, how many times have we've seen setups like this? Over 100, 500 different setups. Just like this right here. And what we try to do here, we try to teach you to see things before it happens. Anticipate it. See it before everybody else. You're the smart money. You're prepared. Then, when it starts perking up and going off on everybody's scanners, you know you're in the money. And that's where you get your confidence to hold on. Everybody starts piling in because they're realizing, yo, hey, this was the #1 stock 2 days ago, and it's starting to perk up. I remember it. People always move on to something new. Always. Tomorrow, Wednesday, a new stock's going to pop up pre-market, and everybody is going to forget about FLGC. Everybody. It's just like what we just talked about, guys and girls. When iPhone comes out with that new phone every year, everybody rushes to that store to get the newest and best thing. Same thing applies in the stock market. I'm going to go and pay $1,000 to, what is it now? Probably $1,500 for a brand new iPhone that just came out, when I can get last year's new iPhone at a 50% discount, buying it for $600-700. I'd much rather go that route, and I do. That's what I do. I don't have the newest iPhone. I got last year's. There's no reason to stupidly waste your money out here, and people feel they have to have everything, the newest and greatest thing. And this revolves and goes over into the stock market. It really does. You got to change the way you think. It's just, I know you guys seen those pictures on Facebook of the GIF of Mark Zuckerberg, Jeff Bezos, who else was it? The dude from Microsoft, Bill Gates. They all dress like slobs, and they're the richest people in the world. Just because that's what it's all about. There's people out there who want to look like they're rich, and the actual rich are actual cheapskates. I mean, look at Warren Buffett. He's one of the greatest long-term investors of all time. He's got billions of dollars. And dude lives really, really cheap. I mean, he stops off at McDonald's and gets like a sausage McMuffin for like 85 cents or something. Yeah, about I'd say 5, 6 years. You gotta update because they purposely do that. They slow down the older versions to make you upgrade. But hey, you want the brand new iPhone? You sit on it for 5 years, you ain't got a problem with it. I mean, that's good too. What we're getting at here, though, guys, is the individuals who need that new iPhone every single year, day one. That is how you are foolishly throwing away money. There's nothing wrong with buying the new iPhone and then sitting on it for a couple years and then upgrading 3, 4 years later or so. There's nothing wrong with that. It's all about your perception. We all see things differently, all of us. And it's all how about you've conditioned yourself in your mind. You get what I'm saying? Like sneakerheads. They like to collect shoes. And I just seen something the other day. If you have a shoe and you just let it sit for 8, 10 years untouched, it'll actually start to decay. I didn't even notice that. Like if you go across the sole of it, it'll flake and fall apart. There's a word for it. I'm sure one of you guys might know it. Let's check out BTBT. BTBT still offering great opportunity on it. This thing's most definitely still in play. So on Monday, right out of the open, right at that $9, this thing rips up to that $10, pulls back, gears up, blows over that $10, and runs all the way up to over 11 to 11.30. Nice move, nice retracement, back down to that $10 level. Let's talk about something real quick on here. So, with technical analysis, what do I always say to you guys when it comes to technical analysis? Analysis paralysis. You can't be 100% to the T technical by the book with technical analysis. You have to look at technical analysis as this is art. Technical analysis is art. And it's all about the way you look at these charts. When I look at charts, I'm not being, what's the word I'm going to use here? I'm not going to be uptight about specific price levels. What I want to focus on are general areas of interest. When I say general areas of interest, I'm looking at psychological dollars. So a psychological $10, $10.50, $11. And you could use $10.25, $10.50, $10.75, and so on. So BTBT came all the way down and it bottomed right here at $9.82. I'll see people get down to the specific T and put their support and they'll rely. All right, $9.82. That's my support. I'm still looking at the general area. $10. If I look how a stock wants to move around these psychological numbers. If I could see a stock in the candlesticks, I want to see it either getting absorbed at that level, or how far is it getting demolished through that level? Is the selling pressure super heavy, or are there buyers down below 10 absorbing the selling? Down below 1075, that's your next support, which is, I'm going to try to get this to the T right there. I don't really pay too much close attention to every 25-cent intervals. Like I said, I try to pay attention to 50-cent, $1 intervals. So $9.50, $10, and I'll scroll out and I'll look at this. Okay, how did this stock react and move around these significant price levels? We're all different, all of us. There's nothing wrong with wanting to be to the exact T and call out, hey, $9.82, that's support. There's nothing wrong with that. It's just not my style. When I remove that line, and you got to think as well, the big money out here, they're not putting random buy and sell orders at a random $9.82. No, the big money is going to be putting their buy and sell orders at $10, at $9.50. They're not going to say, call up their broker and say, hey, unload the truck at $9.91. Why? That doesn't make any sense. Why not $10? An extra 9 cents up. So even here, I got my line at 975. And here at 950, I'll put one. You could see the stock came right down. Right there. At that 950 level, kept popping up to 975, got over that 975, popped up to $10.25, came back down to $9.75 right there. And then once again, there's your resistance at $10.25. I'll even put another green line there. $10.25 right there. So you see how all of these lines, the green lines, they're 25-cent intervals. The stock is playing to the T at these levels. Does that make sense to you guys? So look at the charts. Price action at these significant, important levels. Stop beating yourself up and making it harder on yourself trying to spot support to the T at like $8.87, because nobody's paying attention to that. And also, the advantage of doing this as well, if you put your resistance right here at exactly $11, now you can see as that stock pokes over that $11, is it holding over that $11, or is it getting rejected hard at that $11? And you could see when the stock kept poking up over that big mental $1 level, $11, it immediately got denied. Immediately. And then you could see it tried again, and it had a wick right there. It tried it again and got met with a death candle right there. Look at all the hints this stock is giving you that it's struggling to get over that $11. Let's zoom in on that. Right here. Our red line right there is at $11. Stock poked over it, immediately slammed down. Got over it, long upper wick, instantly denied. Got up above it again. Look at that death candle. That's a huge rejection and a signal like, yo, we're not getting over this $11. There's a lot of selling going on up there. And this is where I preach to you guys. These candlesticks, when you're new, study your butt off learning these candlesticks, because they're going to unveil a lot of secrets and little details that people overlook. You could see after I just broke this down, now you could see it a lot more clearly, and it's hitting you right in the face. Like, yeah, this thing got denied hardcore at that $11. I can see it now. Pay attention to the details. The smallest little details people overlook. And that's where you have that advantage. Just like here. You got a long upper wick right here. There was a lot of selling pressure going on up here. But as this stock consolidated here, look at the longer wicks compared at the top compared to the bottom. The wicks at the top are a lot more shorter than the ones down here at the bottom. What's that tell you? There's people down below absorbing the selling. There's not many people selling at the top. People are coming in and picking up, soaking up the selling, pushing the stock up higher. Little details like that, guys. Little details like that. Candlesticks are so underrated. They really are. People come into this, they quickly comprehend and grasp what candlesticks are, and then they move on to something else. They think it's a secret indicator that all these traders are using, or it's a secret strategy that all these traders are using to make money, when it's not. So BT, even today, this stock has offered a good range of $1.50. So this morning, you guys had a little morning dip down here from 10.50 all the way down to almost 9.50, and then it runs all the way back up to almost 11. This was a good reclaim of the VWAP right here. At that, and look it's right at that psychological $10. So you got the VWAP at $10. The stock came back up and reclaimed $10 as support. That's two strong details right there that you could have picked up on. Because you got to think, the more, it's like, keep it super plain simple. And you guys see how simple I'm keeping it by just focusing on that $10 price level. In my head, I'm thinking everybody is thinking, hey, this stock is holding that big important $10. Let's see if we can lift it up off that. Sure enough, from 10, it runs up to 11. And you also have the VWAP there. And if you go on YouTube and you look at any trading guru that's out there, most of them, not all of them, but I'd say majority of them all have VWAP plotted on their charts, right? So if all these people are using VWAP, we're seeing the same exact thing as they are, right? Makes sense. You keep it just simple like that. There's no reason to overcomplicate things. There isn't. And that's where a lot of people fail. I'm just going to put this on real quick. This is going to be funny. Where's that one? This should be good enough. But I'll see people out here and they'll have their charts. I mean, doesn't this just look like a mess? Doesn't that? And we all know, us as day traders, things happen so fast. And when you're focusing on MACD, RSI, your Ichimoku cloud, volume, average volume, and if you have volume profile plotted up, you just got way too much going on. And you're going to overlook something so simple and it's going to cost you money. And then people start to rely on these indicators. And it's just I mean, this just looks ugly. So if you have a guru out there and their charts look like this, my recommendation, I'd run for the hills and I would run as fast as I could because there's no reason. This is analysis paralysis all day. This is wow. This is no way. No way. It's called overlooking the big picture. Just keep it simple. All you got to do. So going into Wednesday with BTBT, this is either going to keep falling down or we could see momentum come back into this and it could snap back up to 1050, 1150, who knows? Well, what our job is, keep eyes on this, monitor it, put down our levels, and just monitor it. Just monitor it. So BTBT, let's keep that on watch going into tomorrow. I think I heard some people talking about NURO today. Yeah, Neuro had a good snap up today. So right from the open, we ripped from $13.25 all the way up to $15. A good $1.75 rip. Then it gets hammered down all the way to $13.50. And from $13.50 just ramps all the way up to $16.20s. That's about a $3 run right there. A bit light on volume, but that's normal. This was the #1 runner back at the beginning of July. The more these big runners hang around days, weeks after they make the epic big run like this, it's completely normal for volume to just slowly fizzle out as time goes by because other plays are going to pop up. Other opportunities are going to pop up. There's over 2,500 stocks in the stock market. I mean, there's opportunity everywhere. But with Neuro going forward, setting up on this daily chart, I'd want to see 650s or I got MDIA up right there. Let's see. See how it got beat down? 1, 2, 3, 4, 5, 6, 7, 8 straight days. So eight straight days, this stock got beat down. Think of it as that rubber band that we like to look out for. When you got a rubber band and you start to pull back on it, what's happening? You're building up tension within that rubber band. You're building energy up. And once that energy builds up so much, once it breaks, you get that snap to the upside. We see this happen a lot. So going forward with NURO, will it continue? We don't know. But what we can do is take it in levels and observe it. Take it day by day. See how it wants to set up and develop and adjust our plan from what the charts are telling us. That makes perfect logical sense, does it not? That's what we do here every single day. And we do it as a team and a community with all of these stocks in the market. Remember, there's no reason to overcomplicate things. There's not. So with Neuro, I'd look for 14 to hold up on this bad boy and start building off of that. If this thing starts breaking up over 15.50, you got to keep in mind too that it'll start going off on everybody's high of day scanners. And when more people pull this up and they look at the daily chart, what are they going to see? Whoa, I remember this stock a month ago. Yeah, I remember it ran from $4 up to $12 in a day. They're going to remember it. It's a runner. They remember it running. So they're going to jump at it and they're going to throw it on their watch list. Makes sense. That's right, JBATL. KISS. Keep it simple. I'm actually going to go off camera here for a moment. I'll continue going, though. If you guys want, what other stocks popped off today that you guys feel are worth keeping an eye on? Come on. We're developing a watch list for tomorrow. I think I heard somebody talk about CT, what was it? CTMI or something? CEMI. All right. One thing I want to get across and say to you guys real quickly, if you think you have a dumb question, my belief, there are no dumb questions. So don't be afraid to ask questions, okay? I'm not going to name this person who's asking the question, but it is a good question. I feel it's worth sharing with you all. So the long upper wicks means selling pressure and long lower wicks buying pressure. So long lower wicks should drive price up and long upper wicks should drive price down. In essence, yeah, but it doesn't necessarily mean it's going to play out like that. Just because stocks have long upper or lower wicks, I'll repeat that. Just because stocks have long lower wicks doesn't mean it's guaranteed to run up. It's just an observance of what you're seeing. Does that make sense? So if you're seeing a lot of long, lower wicks on candles, you can tell yourself, hey, there's somebody down there absorbing all of the selling. There's a buyer down there. If you're seeing a lot of long upper wicks, you can tell yourself, hey, there's a big seller up there. There's an iceberg. Every single time the stock pops up there, there's a huge order just sitting there, and it's just eating up everybody that's chasing the stock. And this is going to correlate with reading the tape and sitting there and just watching price action. If you just sit there and watch price action and watch the tape, you will get better at understanding price action and how stocks like to move up and down. And you'll get a sense of if there's that supply and demand imbalance. Does that make sense? So let's talk about CEMI here. CEMI was sitting at just below this $3. And it just had a random explosion on it from $3 up to $3.80. Then after hours, it starts running up over $4. Look at this daily chart. This is a good example of your long wick question. You see here on the daily chart, there's two long upper wicks up here. That's telling me prices got denied up at those levels. Prices did rise up to those levels, but it just could not hold its gains, and it tried it 2 times, which is telling me up here at $557, there's a lot of whales up there selling. Could be anybody. It could be a long-term investor that just has 1 million shares, just for example. It could be a hedge fund that's just unloading 200 million shares. These are just examples I'm throwing out there to get the point across. So prices got denied. You got to take that into consideration. And then from that, people give up and the stock falls down. But just going back to our rubber band explanation, for 2 days, the stock pulled down off of its highs, and then it consolidated and went sideways. And from that, shorts start coming in on this, and they start coming in and they're shorting it, because shorts are making money as the stock's going down, right? They're shorting, making money, shorting, making money, shorting, making money, shorting, making money. Then when the stock starts going sideways, they're not making money anymore. So then the stock starts going up. Now the shorts are losing money, right? So how does a short get out of their position? They have to buy to cover their position. And when you have one short cover, it's like a domino effect. More shorts start covering, and it can get out of hand. And then as the stocks hit a new high of day, it starts going off on everybody's momentum scanners. And then longs come into this and they're buying. So now it's like what we call here in the chat. What do we call it? We call it the double whammy. Boom, double whammy. You got shorts covering, you got longs coming in. It's a nice short squeeze opportunity. And from that look at the bounce on this thing. From something simple like that. And that's what caused this big explosion right there. That's why it happened so fast. A lot of times you'll see stuff like this because it was just a short covering their position, and it'll slowly fizzle and fall right back down to where it came from. Then you also have times where it'll squeeze up like this, and then things just get out of hand and the stock just go parabolic. All situations are different. That's some pretty interesting stuff though, huh? And that's the type of stuff you have to learn about, know, and understand as traders. That makes sense? All of that, what I've just taught you and told you, probably would take somebody a year to learn and understand on their own, going through the mistakes and pouring through the education to understand something like this. You gotta know all of the parts inside of the machine to understand how it operates and works. So with CEMI, this could run up. The highest I see it going is like 450 up here. I don't see it really going much higher than that, but you never know. Things could get crazy, and we could throw it on our watch list and see how it wants to play out. You could tell just by looking from the past, this stock, it likes to spike up and perk a lot. You got one right here. It spiked up and perked. You got a day right here. It spiked up and perked. And then you got this big day here. It spiked up and perked. So what's that telling me? That this stock, it's got a personality. It likes to run and snap up. It's a lot to it to learn this game and understand everything. That's why I say it to you guys. There's no way you're going to come into this and just pick up and learn everything in a year. You got to put a lot of screen time under your belt. Witness and see this stuff play out a few times. And put that screen time in. Because things are a lot different real time than after the fact. It's a lot easier to sit here and break down the chart after the day's over with versus this happening real time. So you have to burn these images into your head. That way when it starts to form real time, it'll go off in your head and you'll say to yourself, hey, I've seen this happen before. I've seen this setup before. Makes sense? And back again, that's why I tell you guys, go off, create all kinds of folders and label these folders and save charts. Break down charts, save them, study them, tick by tick, candle by candle, time frame by time frame. Every chart has a story. Your job is to put that story together to make sense, right? I consider myself, I'm a scientist. I'm always testing, refining, testing, refining. And I also consider myself a detective. I'm a detective looking and snooping around in the stock market, putting the pieces together and the clues for the story to make sense. See, look at all these chart patterns that I have. All these different chart patterns. And this is all from me, from my career, going through here, breaking stuff down, saving it, learning it. This is how we get better, guys. And if you don't want to put the work in and do this stuff, think of the person that's doing this. And they're doing even more. So the more you do, the more advantage you have over the other person. That's how you consistently start pulling money out of the stock market. You're putting that work in. And then once you start consistently pulling money out of the stock market, it feels good. All that hard work pays off. It's paying off in dividends, as I say. A stock investigator, yup. I like to see I got my investigation skills from Tim Sykes. He gets a lot of hate and heat from people, but what I really like about Tim Sykes is not good at technical analysis. Tim Sykes is really good at fundamental analysis. Tim Sykes is known for going into penny stocks and determining pump and dumps, calling out stock promoters. That's what he's good at. That's his niche. And I think he does get a lot of hate. He even at times rubs me the wrong way. But I learned a lot from that guy. I honestly did. But what I didn't just stop at Tim Sykes. I branched off and I learned from multiple different people. Because remember what we were talking about at the beginning of this live. We all learn from different people. We all have different beliefs. We all see the market differently. Just like all of these gurus that are out here. They all view the markets differently. They all have their own strategies that work for them. So I'm going to jump around from guru to guru, understand and learn how they view the market, and take away anything that I find valuable from them and make it my own. Does that make sense? And then once you start going through all those charts, learning from them, breaking them down, you'll start to understand and see, like, yeah, these patterns, they never change. They never change. Man, we're going in tonight. There's just been so much knowledge dropped in this live. Wow. Thanks, guys, for sticking with me this long and hanging out with me. Man, we still haven't hit 10,000 subscribers yet. I think I'm like 250 subscribers away from 10,000. After 10,000, the next big goal is probably going to be 100,000. It's doable. It's doable. All right, what else did we have pop off? Some of you guys wrote some tickers here. I think someone said IPA. Or no, you guys know what? I think Robinhood had a pop today. Yeah, look at that. So what did we say in the Sunday scan. You guys, the Sunday scan that we do every single Sunday is so valuable. You guys don't even know. Hood was in our weekly watch list. What did I say Sunday? I said, don't underestimate this new IPO. Everybody and their mother has been anticipating this IPO for years. If it starts to break over 37, 38, this thing can get up and going. And it finally did it today. And I wasn't even able to be here because my internet went out. This thing ran from $38 all the way to $52. That's a great move. That's a $14 run. Wow. So when you look at this and break it down, this thing had a wedge right here. And it fell down through that wedge, came right back up to the area where it fell down from that wedge. And it came back and it got tighter and tighter and tighter. And it squeezed up. That's what happened. You got a wedge within a wedge squeezed up. So with that being said, from Sunday when we said, keep your eyes on Robinhood because a lot of people are going to have this stock on their watch list. When this thing finally went, look at the volume on this thing. So on average, every 1 minute candle had on average 300,000 in volume. Every 1 minute candle on the 1 minute chart had an average of 300,000 in volume. That's a lot of money flowing into this stock up at $40 a share. That's a lot of money. Man, I can't believe I missed out on this. We would have killed it today, guys. We would have. Wow. That's just insane. This just goes to show as well. Look at this. Every single time the stock would have a surge like that, look at how much volume would pump into it. People love chasing after stocks. They love chasing after stocks. And then if you fast forward to today, when this thing was surging right there, look at the volume surge into it. When it was surging right there, look at the volume surge into it. Surge right there. Volume surge. Surge is right there. Volume surge. People love chasing after stocks that are running. It's just human nature because they instantly look at the wow, look at it, how much money I'm missing out on. And they let their emotions come in and take over and they hit the buy button. So yeah, most definitely going into tomorrow, I'd have Robinhood. I mean, the rest of the week, I'd have it on watch. Going into what was today? Tuesday? I'm actually gonna comment that too. So many people. Yeah, it was the most anticipated IPO. The most anticipated IPO last 2 years. So let that be a learning experience as well, now that you guys witnessed it. All right, someone said IPA. What's the float on this thing? It's gonna needs a lot to get going on it. I mean, you can keep it on your radar. It's when I pull up stuff like this, what I instantly look at are the downside moves. And the downside moves are pretty severe on something like this. It's pretty wicked in the way it likes to move. The risk is pretty high on this thing. Even if it spikes from 680 to 760s, it rips up 75 cent. This thing's easily ripping down 740 to 740, 724, 7. So on average, this thing's falling down 40 cent. And it's ripping 75 cent. It's not worth it. ARDX, that's a barcode stock. I'd put an alert at 225. If it triggers, it triggers. Maybe it will try to run up, fill that void in the chart. It's just too low of a penny stock for me. If a stock is under $3, I really won't even pay attention to it. Stocks under $3, and we just had this conversation a few days ago. They don't move that much. They'll move like 10 pennies. And you really got to load up a lot of shares to make good money. So anytime you have to buy more shares of something, you're only increasing your risk. XELA good bounce off of after this fall here. The highest I see it going is 350, maybe $4 if you're lucky. I don't think it's For me, it's not worth keeping an eye on. MYGN. See, this is opportunity that I like to look for. Right from the open, from $31, it runs all the way up to $35. That's a $5 per share run, bruh. That's opportunity. That's what I like to see. Not a stock just having a range of 10 pennies. It's a lot harder to manage your risk. Like I said, you got to load up a lot more shares to make good money. And if it turns against you and you're holding the bag, you're going to get burnt. Something like this, it's volatile. You pick up 200 shares. 200 shares ain't nothing. Runs up even $2, that's $400 in your pocket. It's all about perspective. Perspective and where you see opportunity, right? Everybody's different, like we've said. MYGN, yeah, this was a good move. After its morning run up, it consolidated the rest of the day, and then towards the end of the day, it was starting to go, but the market closed. So going into tomorrow, this thing could continue shooting up. I'll put this on my Monday. See how it plays out. The only thing that would concern me is if volume continues into this, because it is kind of spotty with the volume. Even going back and looking at this, it's not a popular stock. See what happens. OTLK. Man, that AMC sure is getting driven down to the ground, huh? It's down at $33 now. Oh no. OTLK, that's garbage. Do you see strength whatsoever in a stock that gaps up from 225 up to a high of 330s and then gives back 90% of its gap up? I don't see any strength there. They straight diluted the stock all day. So anytime you guys see something like this, stay far, far away from it. Because now you got to think of too. Look at how much volume it had at the open. And everybody that bought in pre-market. Everybody who bought in right there. They're all underwater now. And they are now officially long-term investors. And they're going to hold on to this bag, hoping that it comes back up to where they bought in. And bag holders, they can hold bags for a long time. A year, 2 years, they'll hold as long as they can. As I like to say, I'm a day trader. I'm not here to tie up my money. I'm here to have my money work for me. The ball is in our field now. We can trade with no commissions. We can get in and out if you're over PDT rule. If not, I feel sorry for you. It sucks, yeah. But no commissions. You're over PDT. You can buy and sell as much as you want. There's no point in holding a bag. ATIP? Uh, Not really interested in this either. Doesn't have enough history on that daily chart. It had a huge gap down from 850 to 350, even $3. Just not my style, to be honest. It's pretty sloppy. So you got a triangle right here. See how it fell down below that triangle and then it squeezed up from 405 up to 420. That's a 15-cent move there. And then from 425, it ran all the way up to 445. So it ran up another 20 pennies from 11:30. Man, about 3-4 hours later. So about 3-4 hours it took for it to run up another 20 cent. It's just not my style. I'm not here to make pennies. No offense. I like those stocks that like to move fast and are volatile and that can rip up a dollar effortlessly. That's where I see opportunity. Where I can quickly jump in with 1,000 shares and the stock explode up $1.50. I can quickly sell it and I got $1,500 in my pocket, you know? CLVS short. That was a popular stock back in the day. Yeah, CLVS got beat down. This was popular way back in the day. I remember CLVS very well. And there's like no volume on any of these stocks. HLIT, it only ran up 75 cents the whole day. CEMI, we already talked about. This was a good mover. Real fast. This is more of like a swing trade type stock. I don't know if it'll continue. I think it'll stall out at 450. Just give me a second, guys. I'm catching up with what you guys are saying. I swung 1,000 shares of Robinhood from yesterday 36. Thing ran to 42. Good job, man. That's a lot of money. Back to Robinhood. I like Robinhood. I think that this is going to be a good stock. A lot of people are going to swing trade in the future. I mean, Robinhood is a very, very popular investing app with all the millennials and the new kids in the markets. I mean, go out on the streets and ask anybody, hey, do you have Robinhood? Bet you they're all going to say, yeah. Does Robinhood let you trade in the stock market? It lets you trade options. It lets you trade cryptocurrency. I mean, it has so many different easy access to the market. And that's what people like. Easy access. So just because a hedge fund or the big money isn't interested doesn't mean they're right. You try to always have an open mind. Always. Inside and outside of the stock market. Always try to have an open mind. Stop trying to be closed-minded, I'd say. There was a saying I heard, what was it? Stay away from negative people because they always have answers to a problem. I'm like, damn, that hit deep. Stay away from a negative person because they always have answers to every problem. So even Sava was on our weekly watch list. Sunday, we put it on our weekly watch list for a bounce. This was Sunday. And we said for it to potentially run up to $100. Come Monday, this thing was gapping up just below 80. Gets a run up to almost 90. And then today, there was a good opportunity on it. Right here, this thing went from $82 to $93. So, when you're a new trader in the stock market, I know it's very lucrative and eye-appealing to go right for the penny stocks. Because you're like, I don't have much money. I maybe only have $1,000. I can't buy many shares of Sava, so why not? But if you actually sit down and think about it, if you pay attention to these bigger cap stocks, you'll notice they move a lot more than them penny stocks. And even with Sava here, yeah, it's at $83 a share, but this thing ran up from 83 to 93 in what, 20 minutes? So in 20 minutes, this thing ran up $10 a share. I mean, even if you bought 50 shares of this and it runs up $5, that's $250 versus doing the same exact thing with these penny stocks like this at 6 pennies, you have to buy 200,000 shares. And then what? It runs up maybe what? 4 cents? And you'll make just as much as you did trading something like Sava. That makes sense. So a lot of newer people get turned off on these large cap stocks simply because they think it's way too much and they can't buy many shares. And they overlook the volatility that these stocks have. A stock running $10 a share all within 20 minutes, I mean, that's really, really good. That's really good. And all you have to do, you don't need to catch the perfect bottom to the top. My goal is to get a slice of the pie. I don't care if it's $1, $2, $3, $4. If I can get in and make out of this whole $10 move, get in, maybe make $1, little something like that, I'm happy with that. I made my money for the day. And I do that consistently every day. It adds up. Just like when you sit and think about, if you consistently show up every day, and you just make, let's do the math real quick. Let's say you show up and you just make $100 a day, okay? There's 5 days in a trading week. Do I have a calculator? Yeah. So your goal every day is to make $100. There's 5 days in a trading week. You times that by 5. That's $500 a week. There's 4 weeks in a month, all right? Times that 500 by 4 are 4 weeks. That's $2,000 a month. There's 12 months in a year. So now you take that 2,000, you times that by 12. That's $24,000 a year by just doing something so small, just bringing in $100 a day. $100 is nothing. That's easy. Now imagine if you were bringing in $200 a day. You'd be bringing in almost $50,000 a year. That's somebody's salary working a 9-to-5 job in the United States. Working for somebody they don't like, hard labor. You get where I'm going with this? So just because people look down on small profits, it adds up over time. Even if you were to bring in, $500 a day, that's really not much. $500 a day, that's $2,500 a week. That's $10,000 a month. That's what, that's $250,000 a year. That's a lot of money. That's the opportunity the stock market gives you guys. And you'll go, no, you cannot go anywhere in the whole world and make this type of money that you can in the stock market. The next best thing is real estate. And even real estate is super, super competitive. I mean, that should get you guys fired up. The opportunity that the stock market could offer. Heck yeah, I'll pause my life for 2 years to learn this. For a lifetime of freedom? Bet. AEHR? Volume's too light on this thing. YOU. Yeah, it looks like YOU. It's gearing up for a potential pop back up to 58, maybe $60. That could be something to keep an eye on tomorrow. This is a newer IPO. Had a good run here from 45 to 62. The only thing I'd be worried about is just how light volume is. PRD, I just seen your comment. Can't beat yourself up about that. I mean, sometimes it feels like the stock market is against you personally, and I've read that in a book. It's just, I've had it happen to me too. I would hold on to something, waiting for a bounce on it, and it would just go lower and lower and lower, and the pain would hurt so bad. I'd finally cut it, and then it would finally bounce on me. But for tying money up for 6 months, man, that sucks. And especially, you got to think about it like, I'm tying my money up for 6 months. Now you got to think of, all right, now, was it worth all that time to tie my money up for that long? Like an interest type of way. There's one of the sayings that I like. If you find yourself on Facebook, Twitter, and you're looking up a stock and you're looking to see what other people's opinions are on that stock, you're looking for a reason to buy. HSTO, this was just a pump and dump. I would stay far, far, far away from something like this. Look at how fast this thing went from 84 cents, ran up to $1.10, and then it gave back 100% of its spike. That's garbage. Agreed? Why would I want to put my attention, my focus, and my money into something that spiked up and then to turn around and give back 100% of its spike? That's not showing any strength whatsoever. I try to teach you guys, you want to think and be cruel. Be like a wolf. Be vicious, and you gotta think for yourself. The stock market is a device used for transferring money between accounts. So every single time you're right and you make money, you're taking that money away from somebody else's account. They were wrong. Anytime you were wrong, you just funded somebody's account. They were right, you were wrong. So act and be vicious. Think for yourself and selfish. Always think of the worst possible scenario ever. One thing that somebody liked in chat that I said, and I'll repeat it again, you got to think of if you're thinking about trading, you got to ask yourself, okay, how will this stock fuck me? That's what you got to ask yourself. People always go into trades only thinking about the payout. How much will this make me? I always go into trades, hey, how much will I lose on this? If I was to enter in right now, how much am I at risk? That's the first thing I always think of before I even enter a trade. And it helps. After I identify how much the risk is, then I go on to the reward. And I say, all right, I'm looking to lose 50 cents if I get in on this right now. How much am I looking to make? 25 cents? It's not worth it. Why am I going to risk 50 cents to make 25 cents? That logically makes no sense. Stay away from negative people because they have a problem for every solution. There you go. You got it, Jack Daniel. Megan says, how do we set realistic goals as a beginner? For a start, go through all your social media, Facebook, Instagram, Twitter. Go through your friends list and be picky. You got to be picky and ruthless. You got to ask yourself as you go through each person, does this person benefit me? Does this person bring positive into my life? Why is this person in my life? If they don't offer you anything, or if they're not getting you to the next level, they're worthless. There's no point in them being around. If you got somebody on your Facebook and you notice every single day they just complain. They complain, it's raining outside. Oh, it's going to be a horrible day. I don't want to be around somebody like that. Get them out of here. I want to be around someone, it's raining out, but it's a new day filled with opportunity. Let's get it, guys. I'd much rather be around that guy. Because you are who you surround yourself with. Don't forget about that, guys. Energy is so underrated. People give off. It's like we become who we surround ourselves with. People fear change. So that's a start right there. And then from there, just start laying out a plan. Every single day, you should want to learn something new. Educate yourself. Every day you learn something new, by year's end, you're going to have so many things that you've learned and grown. It's going to, the compound effect, it adds up over time. So small little baby steps. All right? No need no need at all to rush the process. No need to rush things at all. All good things come with time. Repeat that to yourself when things are hard, because you're going to run into slumps and have bad days. What I remind myself with, all good things come with time. Think of the big picture. JBATL. I'm just the 500 times 52. Yeah, that's one way you could do it. That's like being, just trying to give off an example. On average, there's 4 weeks in a month. That's like being critique with your technical analysis. To the T, perfect. Nothing in life is perfect. I don't want to be perfect. I don't want to live a perfect life. It's a philosophy. Is there a list of the stocks that are not choppy when the market opens? Yeah, your watch list when every day when the market opens. Every day in our Discord, Monday through Friday, we do pre-market prep. We go over all the stocks we're going to want to keep eyes on when that market opens. Right here. See, I got my weekly watch list. I put my weekly watch list out, and then I'll go and I'll put my Monday watch list out. Tuesday, today I wasn't here because our internet went out. So then Wednesday, I'd put my watch list, and then we'll all meet up in the Wednesday chat here. And this is where we'll be hanging out, calling out stocks, what stocks are in play, what stocks we think we should keep eyes on. We're all in here working together as a team. And like I said, every day we jump in the pre-market prep here. I get in here, I share my screen, I go live, I pop up right there, and we do our pre-market watch list. Facebook does have some good to it. I don't get on it as much as I used to when I was younger. But if you follow groups like what I like to do is follow groups like psychology. Uh there's some groups on there that I do like. Let me see real quick. Like, I'll follow groups that other people follow, and people do be asking some interesting questions and stuff that they'll ask the community. Like, I follow a couple groups around my area where I live, so I know where activities that are going on, events. If I want to go out and do something and I see there's a festival 20 minutes from my house, like, oh, now that's interesting, I'll keep that in mind. But stuff like universal state of consciousness is what I follow, and people will post stuff like this. I got my phone open, and this says, I am so beautiful in so many ways. what I have to offer is limitless. My aurora is infectious. I radiate love, life, femininity, masculinity, sex, youth, happiness, healing, health, and strength. I'm my own healer, protector, opponent, and muse. I love myself. See, I like seeing stuff like this because it makes me feel good inside. And I also see that other people are out here posting and feeling the same way that I am. And they're all open minded. They want to grow to be the best person that they can be. And that, to me, is the whole purpose of life, to grow and get better as a person, understanding yourself, knowing your purpose. I'm not here to just be, what's the word? It's getting late. Complacent. Work the same job, get married, have kids, live a life that everybody else lives. Wake up every day. So, other group on Facebook, Psychological Facts. Another group, Best Inspirational Thoughts. Another group, Empathy to Awakening. Another group is just called Humans. Funny spiritual memes. So there's all kinds of different groups out there on Facebook, and I would recommend just following a bunch of those. And you'll be surprised what other people post, and you'll get motivation and inspiration from. And it'll also get you to thinking and open your mind as well. Your mind is a very, very, very powerful thing. Very powerful thing. A lot of people just go about using it the wrong way. Like, stay away from people who post all their personal business on social media. I hate that. I meant how you did the weekly calculations. What? Adam Forrest. Gosh, but don't we sentient beings try to achieve that, to be honest? I don't know what you're trying to say there. Okay, Megan. You're trying to set daily goals on yourself. That's a big no-no. So the stock market offers unlimited opportunity, right? Why would you want to put a ceiling on your opportunity? Also, when you put a daily goal on yourself, you're telling yourself as well, I have to make $200 today. That's my goal. What if the stock market does not offer you an opportunity that day to make your $200 goal? Then you're going to be forcing trades. So the way I go about it, my personal goal is to close green at the end of the week. That is my only goal. If I can close green every week, there's 4 weeks in a month. My goal is to close green for the week. That leads to consistency. That leads to a profitable green month. Doesn't matter how much I make. My goal is to be green. If I can be green, I'm living to trade another day. Makes sense? You got to do little tricks like that. And you have to sit down and strategically go about this to make it in this game. Pachingo USA, what's your opinion on the pristine trading method? I have no idea what that is, to be honest. To be honest with you guys, I don't watch other gurus or learn from other people. I just focus on my trading and my trading only because that's all that matters. I've been doing this for 6 years. Once you get over the first few years, you'll stop learning from other people and you'll actually start to just focus on what you know and what your beliefs are. And you will honestly start developing your own methods for viewing the stock market. You won't care what other people have to say. If you're a part of the community here, you guys already know I never, ever really talk about what other gurus are watching, what they're trading, how they're trading. I just don't care. Same thing goes about in life as well. Worry about your business. Don't worry about other people's business, right? The more you get into the stock market and the mindset and psychology of all of this, you'll really start to understand being a trader in the stock market actually revolves around every aspect of your life. It's some pretty mind-blowing stuff. Just don't put a cap on yourself is where I was getting at with that. Because if you put a cap on yourself, you're limiting your possibilities. I want to come into this. If I make $100, I'm good. I'm comfortable with that. Go on to the next day. If I make $400, that's cool. I'm good with that. I have no limit on myself. There's 5 trading days in a week. That's a lot of opportunity. A lot of opportunity. Man, I'm having a hard time trying to keep up with what you guys are saying here. Yeah, don't set number goals. Close, yep, that's the goal. Close green. That's my goal. My goal is to close green for the week. Not for the day, for the week. If I can manage to close green for the week, I'm thinking more big picture. That's what you always want to try to aim for. The big picture. If my goal is to close green every week, that leads into consistency. And that leads into pulling profit every month. Little mind tricks and psychological tricks like that you got to do. It's going to happen, Megan. We're not perfect. We're going to have red weeks. You got to move on. That's another thing as well. You can't let it get to you and eat at you. And that all comes from being comfortable the share size of how much you're trading. Good luck on that AEHI, Michael. I hope that works out for you. Hopefully that's your lottery ticket to retirement. Just like everybody that got in on AMC, they're all underwater. And they're hoping for the mother of all squeezes. I've seen this stuff happen over and over and over and over and over and over and over again. Majority of people lose money. You know what I actually did? I got in an argument on Twitter with somebody, with a believer on AMC, and I saved his name into my photos. That way, when AMC does fall, I'm going to go back to that guy, and I'm going to say, see, I told you so. The American way is to believe in companies. As of right now, I'm not a shorter. I don't short stocks. Maybe I will when we go into a bear market. But there are just so many opportunities out here going long and on short squeezes. And in this game, right now, currently, shorting stocks, it's very, very competitive. It's overcrowded. Because the brokerages every year switch from popularity of having easy borrows. One year it could be E-Trade, has borrows all the time to short all these different stocks. The next year it could be TD Ameritrade. Then the next year it could be Centerpoint Securities. So you have to have multiple different brokers open and transfer your funds to that popular broker for the year. I think this year Cobra is the popular broker for shorts and borrows. So another thing, I mainly trade small cap stocks. So stocks between $5 and $50, the borrow and the supply is going to be very, very limited. So you're not really going to find many shares. And like I said, it's very, very competitive. Very competitive. There are people waking up 4-5 hours before the market opens just to reserve shares, to have them to short a specific stock. And they may not even use those shares that day, and they still have to pay the reservation and the borrow fee, even if they don't use them. It's very competitive, and to me, it's a headache. It really is. I don't want nothing to do with it. If a stock is easy to borrow, then maybe I'll if the setup's there, if it's easy to borrow. But it's super competitive. It really is. Especially if you're trading small cap stocks, and that's what I trade. David Friedman, would you consider shorting AMC as a special case? Shorting just for a day trade scalp? I mean, if you look at AMC, it's been a short play for some time. All up here. Actually, that's pretty sloppy. When it fell down right here and went to that downtrend, that's where you should have been shorting it all here. And then when it came all the way back up and it retests the area pretty much where it failed from that wedge, there was your other short entry. It does look like it's starting to peer off. So you slap a trend line on that. I mean, this thing, it could be going down near $20. It very easily could. Because the lower this thing goes now, we know a lot of people are in on this, holding and hoping. Because all of these gurus on YouTube, and we just did a video not too long ago talking about AMC and all of these. I mean, it's unreal, guys, for real. We were having people on YouTube create accounts this year, and they already have 300,000 subscribers, and what they do every day is just stream and talk about AMC the whole trading day. And they're getting paid to do that. That's insane. So they're pumping up the stock in a way. They're trying to keep it alive. So a lot of stupid money, in my honest opinion, is in on this, and the average Joe is just going to get hurt. I mean, there is that chance. Yeah, this could squeeze up and to 100, 200, 500. Always keep an open mind. Anything could happen. But going off of technicals, and that's where me and this one guy got in an argument on Twitter. He's looking at it at a fundamental standpoint. I'm looking at it at a technical standpoint. When I look at this chart, it's not looking good. It's looking like it's peering off and it's about to slam down super hard. He's pulling up fundamentals, talking about naked shorts, how there's no shares available to short. The institution, I mean, he was pulling up all these fundamental statistics. And in the stock market, when it comes to fundamentals, we're not in a fundamental market. I mean, if you go back and you look at Warren Buffett's story, and this all goes back to how much you educate yourself and learn about this game. In Warren Buffett's career, at one point, he was trying, and there's documentaries that document this. Warren Buffett did try with small cap stocks, trying to find companies that were just starting out that could potentially be the next Amazon or Netflix. And he was going off of fundamentals. And the fundamental, they would look good on paper, but they would just never grow in the market. They would never become of anything. So what did Warren Buffett do? He gave up on it. He said, instead of trying to kill myself, trying to find the next Netflix or Amazon, why not just invest in companies that already established themselves? And they're already got a book of dominance in the records. They're fundamentally strong. And they're growing and growing exponentially every year. Why not just focus on them? And that is when he started making his millions and billions. It's actually a good story. Not many people know about it. Man, guys, we've been going for a long time, 2.5 hours. It's already going on 10 o'clock at night. But going at a technical standpoint, David Friedman, AMC does look like it's about to peer off down and slam down pretty hard. But with AMC, this thing has a life of its own. How many times have we seen this thing just randomly surge up $10, $15 a share and just go wild? You know, you got to pay more attention to the bigger time frame with AMC and take it in levels at a time. Right now, you can easily slap a trend line on it, connecting the lower highs on it, and just see if the stock obeys your lines. If it obeys your lines, then it's working the way you're seeing it. That $30 is going to be a big level for it. If it falls through 30, it's going to free fall to $20. And going back to when I was saying there's a lot of average Joes in on this, they're going to get fear and they're all going to jump off the roller coaster. Because everybody and their mother all have shares of AMC. Because they want to believe this stock is going to make them rich. Wall Street is not going to make everybody rich. There's no way they're going to let that happen. Right? That's right, don't know. There are shorting opportunities, but when you're in a super, super strong bull market, don't fight it. Don't fight the bull in the horns. That's like showing up to a bullfight wearing a red shirt. You're sitting front row. Yep, that's the advantage of trading the same stocks over and over and over again. You get to know the stock's personality and you get comfortable in the way it likes to move. Yep, I agree with you 100% on that, JB ATL. See, you got an idea, JB ATL, of what works for you and you're sticking with it. And that's all that matters. And you could care you could care less what other people think about specific stocks because you got what works for you. David O. Friedman, no problem, man. Keep coming back and sticking around. You'll learn something every single time. And even I myself, I'm still growing as a trader and as a person. I want to, every day, every week, I want to grow to get better and better and better. And if you guys seeing this right now and going back and you're watching all of my back catalog of videos, you've seen the growth in me myself over the course of time. And if I'm already kicking it on all cylinders at this level, I'm amazed to see how I'm going to be and what I'm going to be doing a year, 2 years from now. Take it a day at a time. And like I tell you guys, learn something every single day. Work on yourself every single day. It will add up. And with all the knowledge that I have, I show up every day to trade. Even on days I don't trade, I show up. I put that screen time in. I'm getting all that time and experience under my belt, and it'll pay off down the road. For me showing up every single day, and I'm outlasting 90% of people who quit in this game. I'm showing up every day. I'm living to trade another day. All these new people coming in every day, I'm taking their money. They quit. New people come in. 10% succeed. They'll move on. The 90% will take their money. They'll quit. It's a never-ending cycle, and it'll repeat over and over and over and over and over again. And that's why I created this community, guys. I want to build a community where everybody wants to succeed. We're all here motivating each other, pushing each other. We all want to be successful in life, all of us. You guys watching this, I want you guys to be more successful than me. I don't care if people get more successful than me. If I can help other people achieve what they want and what makes them happy, and I can achieve success on my own right, that's all that matters. As long as I can live comfortably and I'm happy, that's all that matters to me. To see somebody else go above and beyond and do better, that's awesome. I'd love to see that. That's another thing too. It's like negative people, they can't stand to see other people do better than them. So they feel like they need to pull that person down back to their level. That makes sense? I don't want to be around someone like that. I want to be around people that help push me to that next level, and I'll help push you to that next level. There's already too much hate in this world. Alright, I'm going to go ahead and get off of here. We've been streaming for almost 3 hours. There's a lot of golden content in this stream, I'd say. I think we got a good list going into tomorrow, so we'll see what also gaps up tomorrow morning. I didn't even get to go over what stocks were in my weekly watch list. I'll do that in the morning. You guys have a good rest of the night. Rest up. and we'll come in tomorrow. Kick butt. It's hump day tomorrow, Wednesday, the 4th. We'll get out here and get it. All right, guys. Be safe out there. As I always say, have that patience, have that discipline. Study, study, study. Thanks for hanging out with me tonight, guys. And thank you guys. I gotta clear my throat. Thank you guys for supporting me and my channel. You guys just showing up and watching is supporting. Subscribing is supporting. I appreciate it. Thank you. We're still on our way to 10,000 subscribers. We'll get there. One day at a time. Alright, gang. I'll see you guys all tomorrow in chat. The rest of you, be safe out there, and I'll see you next time. Peace.